So I want us to back test this pair. So this is called, of course, so I had already started, so I just want you guys to join me in this. So first of all, this is what I'm doing. So you can see we had we are bearish. First of all, we are very bearish on this pair, you can see. So it means we will be looking for bearish setups, and you can see there has been this bearish pump from here. All this has been a bearish pump, but you can see that it seems like market is taking back, is doing some pullback. So I drew my Fibonacci tool because most certainly price will always come to this point around the 61% level and the 50% level. So that is where mostly price reverses from. So that is what I'm expecting in this case. So you draw your Fibonacci tool from the low to the bottom, and then you expect to see price get to around this point and reverse. So we want to check first the behavior of the candles as they push towards that point. So let's see. Yeah, so there is a very nice, you can see there's a very nice momentum right about there. So we've not yet gotten to that point, but then you can see there is a very nice rejection around the 50% level. Let's see. So yeah, so this could have been, this might have been, so when you're doing your analysis, you'll always look at the nitty-gritty. So first of all, this could have been a liquidity sweep here. This could have been a liquidity sweep. Then here, this could have been an inducement. Okay, so there often is an inducement in the market, but let's see if it's an inducement or we just missed that entry. So in case price goes below the 0% level, then it means price will not activate our orders from that 50%. So let's just watch. Yeah, so yes, give me a minute. So yes, so you can see we have activated the order because we have tapped the 50% of the 50% of that particular order blocking ilikuwa kwa hivyo. So let's go, let's see if this trade will go our direction. So we have our stops just at the 61% level, so it's always often dangerous doing that, but let's see if this plays out. So yeah, so for example, maybe we had our limit order from here. So let me just move the select back kidogo to around here. So maybe we had, for example, our limit order at the 50%, and then we have our so yeah, so then we sell from around there. Let's see how it goes. Nice momentum, very nice momentum. So we can have our take profit right about there. And then we can also have our stop loss right there. So let's see what will happen. So you can see there's a nice momentum from there, and then that trade has closed. So yeah, so you can see there has been a nice momentum from the point where we took our sell to here, and you see it was a sniper entry. Yeah, you see. So that was our low. We swapped that low. We are not interested in this momentum again. Now we again now start looking for other re-entries maybe. Yeah, so that is our first back tested trade of the day. So now from here we start looking for other entries. So first let's see what happens, because at the point we are right now you can't see anything. So yeah, we are seeing some nice momentum, some nice bullish momentum. So that as well might be a pullback, but then we are not interested. We are not very interested in that. We want to see first liquidity sweep first, or a creation of an order block. Yeah, so you can see some. So that could have been a pullback, but then we can't clearly see which high we would have marked. So that's why we have ignored that one. Yeah, so oh yeah, so there's something we've missed there. So first of all, you see this during this pullback, you see there is a creation for this when we have this pullback. One thing I want you to notice is that we are bearish, so all this is a pullback. Okay, so now I want you to notice something, that let's play. So we have had a pump higher, and then we have this small change of character here. So this you know, there is always an internal structure and an external structure. So this is an internal change of character here, or a market structure shifts. So now we start looking for, that's a market structure shift. Yeah, so we are expecting to see break of structures to the downside, but then again you see we have another internal market structure shift here. So again now we have switched, we are looking for internal buys. So we are looking for buys internal. So now if we are looking for buys around there, I want you to notice after a market structure shift, mostly we always have a fair value gap or an order block. So for example, there's a fair value gap there, and then there is this order block here. So we're going to take maybe a trade from this order block. Remember, we already have a liquidity sweep. We already have a liquidity sweep here. You see here, there was a liquidity sweep here. That is a liquidity sweep. So we are going to take a trade from this particular order block, and then we will target. We just have a simple target of that most recent high, and then we're not interested in the rest. So you have your stop loss just right below there. Have a tight stop loss just in case, because you're trading a pullback. You never know when this pullback ends. That is why you have a very tight stop loss around there. So you can target there. First you can have maybe your first target here, and then you can close some partials, and then maybe again have another target that high. But then that high is not certain, because remember the trend direction. Okay, so it will depend on the trend direction. So let's play and watch. Yeah, so we've had that, and then so you can even have now this stop loss here, this take profit at this recent high. Yeah, so it's not a very good idea to have a very ambiguous take profit, because we are trading a pullback. But let's just try if it will play out. So yeah, so you can always scale down to the lower time frames to check a change of character and stuff like that. So look at that momentum. Look at that momentum. Look at that. momentum that we have right there. So very nice. And again, now here at the point where we are, you can also spot there's a BPR here. BPR is a balanced price range, so for those who trade ICT, so you can be expecting to see again a market get to this point and then reverse, but it's not very certain because this momentum, this bullish candles momentum, this candle did not lead to hardly any liquidity sweep. See, so yeah, that is the reason why it can't. It's not a very strong BPR. So if you trade ICT, and I know you know that. Then yeah, so yeah, so you can see that's our second trade of the day, and we've smashed our tech profit. So it's quite simple, not as technical as anyone will expect it to be, but it's simple and precise. That is the most important thing. Simple and precise. At least you don't have, or price doesn't give you a very long drawdown. You're not in a very huge drawdown often, right? Yeah. So and then so let's see again if we find another entry. So let's first get to see the market direction, because yeah, so you see, even if you targeted that high, you could have smashed that take profit, but nevertheless it's still okay, still okay. So yeah, so let's see first of all if we can have, let's see the 50% of this Fibonacci, if there is anything around there. So there is nothing much around the 50% Fibonacci, so we wouldn't really expect to see anything, any reversal from the 50%. So whenever you have that 50% thing, lazima ukuwe na so you can see there's a very nice bearish momentum. So internally all this was a pullback, so we traded a pullback. So let's see if we have another anything else created in the market. So there is all these are nice bearish momentum, but you can't really see where you expect the market to reverse from or where to take a trade. So it's always important that now you go for the third phase of trading, that is patience. Nice. So you can see we have an accumulation around there. So this is an accumulation when price is just around the same point. So you see from around this time we've been accumulating. Now that's that could be a manipulation of prices. Let's see. Again. So nope. So I can't really get any entries from around here, but let's just keep watching the market. We'll get some nice entries, I'm sure. The market is just pumping. Maybe we can have, okay, but when we have this accumulation just before the market plays out, when we have such an accumulation, there are always most certainly orders left in the market when we have this pump ya kwenda juu yote. So you can be looking for a trade around this accumulation zone, but it's not a very good idea, or it wouldn't give you a very nice entries, something like that. So let's just see. So first of all, we can have yeah, so let's see. Okay, yeah, so you can see there's a very nice momentum around there, and with that momentum, let's see if this order block will work out, and then I'll explain to you why I think it won't work out. I'm not sure it will, but I think it shouldn't because of some reason. But oh, okay, it can, because we have already had a liquidity sweep here. So even if it's a loss, it's going to be an inevitable loss. So that could have been our liquidity sweep, and you see price has also wicked that candle that led to that liquidity sweep. Price has wicked it out. So let's see if we can be targeting any low. Which low should we be targeting in case we take that trade? First of all, where should we? Okay, we can be looking for price around there. Yes, because you see as well, this candle could be our another of our order blocks. So maybe there might be a reversal from here. So that I'm not sure of, but let's see if this one plays out first, and then you can have your stop loss around there. Let's see. This is a very dangerous trade, by the way. So this is not like the other ones that we've taken that are almost quite sure, that we are almost quite sure of. So let's see if we'll have crazy momentum. So let's see. See that pump is very dangerous, by the way. So those, if when you see such candles, such long candles, they tell you that you're going to get wicked out. And you see we've been stopped out very easily in the market. Yeah. So something that you must know whenever you have such momentum, you see this momentum. So if I was trading and I see this candle and this candle, I will know that this is not going to play out. Now let me give you some reasons or some things you should know about order blocks. Now, first of all, price must approach the OBs correctively. Now this means, or this would mean, let's move the market this way, and then so that we have some free space here to write. Price must approach the OBs correctively. So it means that price inakuja hapo polepole, and then another thing, we must see a fair value gap, and then another thing is liquidity sweep, another thing is trend direction, price in trend direction. Nice. So these are always low probability setups. When you take such a setup like the one we've taken, it's a low probability setup because first of all, I've told you price did not approach our OB correctively. Correctively means like price inakuja hapo pole pole hivi, and then we have expansion, correction, expansion, correction. That is how price should come. You shouldn't have a price, or you should not see something like price just pumping to that OB and then this. So this should not happen. So in case this happens, you just know that you're going to get wicked out. Like your OB will not, or most certainly will not work. Okay. Yeah, so that is the reason actually why we have gotten wicked out for that specific setup. So you can always do these. You can backtest on your trading view just to keep your brain moving, because you know most people are lazy during the weekend, because after all it's a weekend, you see. So make sure you guys have being a backtest on the weekends, so that you refine your strategy, so that during the week when you get those entries, they are very nice entries that won't mess you up. Yeah, so that is it for now, guys. Let's stop from there. So if you watched to this point, make sure you subscribe to my YouTube channel, or if this is on TikTok, make sure you also like and share this content. Yeah, you can also comment what you might get interested to be taught, like what you might want me to teach you. You can just comment down in the comment section. Yeah, see you guys later.